This is the second video in this series on the 5 highest winning probability chart patterns. In this video, you'll see the cycle low retracement reversal pattern. And just as a reminder, you can usually recognize these same chart patterns with whatever indicators you are currently using. You don't have to use the power cycle trading indicators that you'll see me using in this chart review. Now, my goal with this video series is to make it easier for you to recognize these top 5 probability chart patterns with whatever indicators you like to use. Now, this is a cycle low retracement reversal, and this is the ETF XLV, which is a healthcare ETF. So what I like to look at is the weekly time frame and a daily. So we're looking at kind of the shorter term duration swing trades. So you can see here on XLV, this is the weekly time frame, that it's pulled back to, this is a 21 period exponential moving average. So you can see that it's been tracking. I call this an automated trend line. So you can see how it's tracking this 21 on the weekly. So it pulls back here. This is a reversal pattern right here. You can see that arrow reverses and comes right back down to this 21 exponential moving average, holds. And then here's a reversal indicator that we use, and it goes back up to the top of the channel, kind of a cycle high. And then here's another one. It retraces back here again to the 21. So this is where we look then for a retracement reversal for an upside move. We shift over here to the daily time frame, and you can see that it came down, broke through this cluster of moving averages, and held right around, this is a 100-day moving average, that magenta line. Now we started getting reversal indicators, signals here, okay, for the daily time frame, and then we started getting momentum. You can see down here cycle 1, cycle 2. These are momentum based indicators. So you need momentum to push price. Without momentum, this downtrend would probably still keep going down. But with that momentum shift, you can see then it reversed. We had a volatility squeeze, which you saw in first video 1. It cycles up, pulls back again, retraces back down to these moving averages, the cluster of moving averages, the 50 simple, the 8 and the 21. And you can see how it held here. I mean, it's not to the penny, but what you want to do is look to see how it settles into this, what we call a demand zone. So it settles here, and then it reverses back up for the next leg up. So that's a cycle retracement reversal for move back up from a longer term trend to the upside, using the 21 exponential moving average on the weekly. Let's take a look at a couple others. Now this is Biogen, BIIB, so Biogen, a biotech stock. So you can see how this was a cycle high reversal. We'll go through that on another video series, but you can see how price came down hard and then look, came into this foundation. You can call it kind of a major support or foundation of moving averages. This is the weekly time frame. So this blue line is a 200 period moving average. The solid yellow is a 150 period moving average. And then here's that 21 exponential that we like to use for kind of tracking trends. So you can see how it came down, held this major support, then chops around. It chopped around for 1, 2, 3, 4, basically 5 weeks. And then we got this volatility squeeze right here, which I showed you in video 1. And you can see momentum shifted up on the daily, cycle 1 and 2, and we got an explosive move back to the upside. We had a nice move up. And if you put your fib levels in here, then you can see this came back into like the 618 retracement and then started to come back off. So that's a cycle low retracement reversal back up. So the daily time frame with momentum and a volatility squeeze triggering that upside momentum on that trade. Here's another example on Apple. So this is again the weekly time frame on the left, daily on the right. You can see how Apple came off hard, came right down on the weekly to this, again, the 21 exponential moving average, and held. Okay, so it went through a little bit, but what you want to do is see if this support, you got to give it a little bit of flexibility, plus or minus. But you can see how it came down and then recuperated, closed back above that 21 on the weekly, and then it started consolidating. You can see on the daily. On the daily, it also came down to, this is a 150 simple moving average, so held that. So you see all this different support, and then started consolidating. We started gaining momentum. You can see down here the blue is cycle 1 momentum, cycle 2 here. So that would be our typical buy signal right there when we get both cycle 1 and 2 above 0 for positive momentum. And then you can see it just gradually then took off to the upside. This is a cycle low retracement reversal on the Euro US dollar pairs trade. So again, here's the weekly time frame and the daily. So what you're looking for is clusters, major moving average clusters, where they all kind of compress together on both the weekly and daily, and then it gives you a good support zone to trade off of. So if you look here on the daily time frame, this chart on the right, you can see that it came down, this cross came down to this 21 exponential right here, that dashed yellow on the daily, and then also this blue is your 200 period simple moving average. So very strong moving average support right there. And then over on the weekly, you can see moving average support right here on the 8 exponential and that 21 below. So this is where that cross stabilized, and then we got reversal signals here on the daily time frame, with that blue arrow being a reversal signal that we use. And then you can see momentum cycle 1 and 2, we're starting to go up to the upside and a push back up. So reversed off of that, or reversed and retraced off of that moving average. So the next video in this series will be video 3, and this will be the cycle high retracement reversal. Hope this helps. Talk to you on the next video.